Great. So we are making really good progress here. We've registered all transactions that occurred during the first 2 weeks of business. Our task here is to register the transactions that occurred during the next 2 months. Even though the business made sales and had expenses on a daily basis, we'll make a single entry for these transactions in order to save some time and reduce complexity. Let's get started. First of all, we can see that on the 15th of July, the firm acquired raw materials for $900 and paid for them with cash. I'm sure that you already know how to do these entries. Think about it for a second. Ready? Okay, here we go. The firm buys raw materials, which are an asset. And we know by now that assets stand to the left. Debit means left. Hence, we will make a debit entry in order to register the increase of raw materials. Cash is an asset too, but in this case it decreases, and we will credit its account for $900. Let's go to the next sheet and fill in our T accounts. We debit raw materials and credit cash. Good. By the 20th of August, the two friends were able to make sales of $2,700. Let's make the necessary entries in our daybook. Revenues are directly tied to a firm's income, right? Income is tied to a firm's equity. When liabilities and equity increase, we have a credit. Following this logic, we can conclude that when revenues increase, we will have a credit. Let's write the increase of revenues on the credit side. The firm receives all of its payments in cash, so when it sells its products to customers, its cash will increase. Cash is an asset and increases. It stands on the left side of the balance sheet. Left means debit. We have to debit the cash account for $2,700. I'm sure that you've already grasped the logic. Let's include these entries in our T accounts too. The next transaction that needs to be considered is the use of raw materials. I'll write the 20th of August as the date of this entry. We need to show that raw materials have been used for the production of goods that will be sold. We have lemons in the warehouse, and when the two friends make lemonade with these lemons, we account for this in cost of goods sold. Raw materials are an asset. When an asset decreases, we have to credit its account in the daybook. A credit of $900 for raw materials. On the other hand, cost of goods sold increases. It is an expense in the income statement. We already know how to account for the increase of an expense, right? It is a debit. We'll have a debit of $900 for cost of goods sold. These transactions then have to be included in the T accounts that are on the next page. A credit for raw materials and a debit for cost of goods sold. Very well. Did we forget something? Oh yes, we did not pay our electricity bill. We have $200 worth of utility bills. Let's pay them. I'll make an entry dated as the 20th of August. The bills will be paid in cash. Cash decreases, and it is an asset. Hence, we need to credit the account. The counterpart is utility expenses in the income statement. It increases by $200. We need to debit this amount. As you can see, everything balances. Credits and debits match, and this is how it should be. Our T accounts are almost ready. We need to include these two entries, plus the ones that will be obtained in our final transaction. The last thing that needs to be accounted for is depreciation. In determining the profits of the lemonade stand throughout the summer, the two friends have to consider the fact that their stand is worth less after they used it throughout the entire period. We already learned what depreciation is in one of our earlier lessons. Now we'll show how it is accounted for in practice. At the beginning of our exercise, the two friends bought the stand for $1,000. The account that we opened is property, plant, and equipment, right? Okay. We need to show that the value of the stand decreased by 10%. It was $1,000. Now it is worth only $900. As you can imagine, this transaction does not include any cash movements. We are simply showing that the stand is worth less now. We will also show an expense in the income statement. Such expense is related to the fact that we used the stand in order to earn an income during the period under consideration. We have to consider two accounts: PP&E in the balance sheet and D&A in the income statement. Let's write the respective entries. PP&E is an asset. We already said that the value of the stand decreased. When the value of an asset is reduced, we need to credit its account. A credit of $100 for PP&E. The other account is D&A, which is a cost. When a cost increases, we have to debit its account. Therefore, we will have a debit of $100 for D&A. Let's transfer these entries to our T accounts. I'll create a T account for D&A and register a credit for PP&E and a debit for D&A. Excellent. These were all the transactions we had to consider. I'm sure that at this point you've grasped the logic of when to debit or credit an account, which is one of the most important things in accounting, by the way. In our next video, we will use the T accounts that we created in order to create an income statement and a balance sheet. Thank you for watching.